The broadcast is now starting. All attendees are in listen-only mode.
A huge welcome to everybody who's listening from across the world to this UK IBC webinar in partnership with FICCI and Kingstub and Cassiva. Today we're going to be looking at the impact of COVID-19 on the Indian economy. My name's Chris Hayes. I'm one of the directors at UK IBC. And first and foremost, I hope that you are all safe and taking the advice and guidance of your own government to protect your health and those of our vital care workers during this difficult times. Our thoughts and prayers are with the 1 million people worldwide who are battling the virus at the present time, including the Prime Minister of the UK, Boris Johnson, and of course the families of those 82,000 people who have so far died. Let's hope the collaboration and cooperation of business, universities and society will continue long after this virus has gone to help address some of the other challenges we face globally. This webinar is one of a number of webinars that we're doing, and the UK IBC is taking steps to ensure that our networks are kept as up to date as possible with the key business and government issues that are facing and coming out of COVID-19. Our next webinar is on the 16th of April, and we'll look at university social responsibility and how universities are playing a vital role in taking dialogue on key issues to implementation. Details of that will be sent out shortly to enable you to register for that. Also, please feel free to join us on Twitter. You can see on the screen our Twitter handle is @UKIBC. You can also see that FICCI India's Twitter handle is on there as well. And of course, Kingstub and Cassiva are on LinkedIn as well, so feel free to join their group. You can also log on to our website for our newsletter, which goes out on a monthly basis. And you will also find our previous webinars that are on there, which include topics such as protecting your IP in India, employment legislation, and of course the recent updates to the bankruptcy and insolvency code. But before we start, just some housekeeping. You will all be automatically placed on mute. So if you have any questions, you will notice on the side of your panel there is a questions section. Please feel free to add any questions that you want anytime during the presentation, and they'll be coming through to me and I'll be able to ask those on your behalf at the end of the session. You will also be glad to know that we are recording this session. So this will be on our website as of tomorrow, and you will receive that link to enable you to look at it in case there are any sections that you want to re-listen to. We have a great lineup today, and I'm delighted to first introduce to you Mr. Dilip Chenoy, General Secretary at FICCI, the Federation of Indian Chambers of Commerce and Industry. Dilip has been the Secretary General now at FICCI for over 2 years, and as I'm sure you'll know, FICCI is the voice of Indian business and industry, from influencing policy to encouraging debate, engaging with policymakers and civil society. FICCI articulates the views and concerns of industry. Dilip, I know you've got an excellent presentation to talk about some of the surveys that you've been doing, so over to you. Thank you.
Thank you, Chris, and good morning to those in the UK, and good afternoon to people this side of the world. I want to echo Chris's sentiment about hope that you're all safe and keeping safe. Keep safe, keep indoors. And our thoughts and prayers are also with all your families and your extended organizations wherever they be in the world. So I want to first begin by thanking UK IBC for partnering in this initiative. I think this is a great way to communicate. I see that there are already 44 participants online. I think my presentation, what I'll try to do is cover it briefly. One is, the COVID-19, what is the global crisis, what are global forecasts, what's the Indian forecast, what's the impact in different sectors. And then second, which will be slightly in overlap with the next presentation, measures initiated by government in India to address this, further recommendations by FICCI, and then results of a FICCI survey in India on the impact of COVID and how it actually has rolled out. And then end with what FICCI is doing to help members in this initiative. So if I go to the next slide. Okay. So I have okay. So if we look at globally, initially till February 10th or something like that, it was in China. Now you see the US graph kind of exponentially growing. The other hotspots, Spain, Italy, UK also has rising graph, and India has been not that many numbers, but I think still is a cause of concern. And if you look at the different revised forecasts for countries around the world, many are in negative area, and China and India are still holding up a little bit, but it depends on how far and how long and how extensive this outbreak is. If you look again, it's really a health crisis also. And if you look at health expenditure as a percentage of GDP, India is much lower than other countries. In the Global Health Security Index, we are at 46.5, and I think what we're actually seeing here is also the proportion of people above 65 in India is actually lower. So, and also because services a significant share of in GDP, the cutting down and lockdown has actually helped in controlling the numbers in India. Of course, everybody from Moody's to CRISIL to Standards and Poor, India Ratings and Fitch have given latest forecasts. The only thing which is sure about this that they will be revised every week depending upon the lockdown. So you actually have demand, supply, and kind of production, and the impact on industry has been multifold. Initially, in the early days of February, the whole thing was imports of APIs and imports of solar panels, etc. But now we have a different set of challenges going forward. If you look at the different sectors, which is the third part of the first part of the presentation, we look at tourism and aviation actually is shut down, right? It's totally shut down. Aviation is only running specific cargo flights, but there are no international flights coming in, only international cargo is alive. There's absolutely no international or domestic tourism. The media and entertainment industry is shut down. You can't even film for new releases on television or Netflix or Amazon Prime or Z or whatever the channels are. Retail is closed. Only essential retail and groceries are open, so there is a huge challenge there. Consumer durables again impacted. So what we are seeing is that in the short term, you had online healthcare, e-commerce, personal care, online entertainment, subscriptions, and online media actually growing. So there were some sectors who actually grew and will keep this momentum because this is now becoming the new norm in the way people are consuming these services. Some others like food, telecommunications, utility services, retail, pharmaceuticals have spiked in the short term and maybe will last for about 6 to 9 months. And of course, a number of things which are hit in the short term, which is apparels, beverages, insurance, agriculture, chemicals, mining and metals, services are hit in the short term and will hopefully recover in the long term. But there are some sectors which are hit in the short term and will take from 12 to 24 months to recover, including restaurant and food services, transportation and tourism, logistics because of different reasons, entertainment and education, which is offline, and whole lot of auto ancillaries, real estate and consumer durables. So FICCI had also done a survey, and a lot of people, nearly 61% felt that actually 81% felt it will be very high to moderate, and only 9% said very low, and 10% said low. And it actually goes back to the sectors that I just talked about. Everybody, 73% actually felt that there's going to be impact on order book. Really, 8% look is going to be increased. These were pharma and online delivery, etc. Cash flow, significant portion felt is going to be a problem, and 63% at that time felt the supply chain was impacted due to the COVID pandemic. I think this number will go up because it is really changing as we since the time we did the survey. So the government of India and RBI announced relief measures. The first one was on the 24th of March, where the finance minister announced procedural changes in terms, and this is covered very well in the next presentation, so I will not talk about it. They also announced a $1.7 trillion stimulus package for the economically weaker and vulnerable sections in terms of direct benefit transfer, replenishing of gas used by women, support to self-help groups, support to elderly people, support to pensioners, and support to women. So that was the whole package there. They also said they'll front load the direct benefit transfers to the farm sector. The third set really came in by RBI on the next day, which talked about reducing the repo rate. Industry is not very happy with this, but actually in the current scenario, interest rate change will not make such a difference other than, the banks were permitted to allow 3-month moratorium for EMI payments on term loans, etc. They did not talk about any interest halt at the moment. And of course, they talked about LTRO operations to improve liquidity and the cash reserve ratio to, again, to improve liquidity. Then the trade-related measures came on the 31st of March, which included incentives for goods exports and all of that. So on the right-hand side of the slide, we actually said, which were the FICCI suggestions considered by government and RBI fully and partially. There is a full set of further recommendations from FICCI, which are with the Prime Minister and with the Finance Minister, a lot of people in the government, and Mr. Ranade has really helped us in formulating a lot of this, so he may talk about this later. First is really what was done for the in the first tranche for the bottom of the pyramid. I think the understanding was that the lockdown may continue for a specific period, but the impact is longer, so we need money to be injected for relief and rehabilitation across all levels. We are looking at setting up a revival fund, which will promote scientific research and create self-sufficient industry clusters with value chains for products where India has high import dependence, and then look at a phased opening up of the economy and restarting growth, fundamentally dividing India into different zones, looking at the patients and moving outwards. So red, where there are currently increasing cases, yellow, where the only active cases and new cases, and green, where there are absolutely no cases and there's no history. So open up economic activity in the green in a phased manner, and different strategies for the yellow and red, and get everybody to move first from red to yellow and then yellow to green there. And the demand side interventions also have been listed out on the slide. A lot of agriculture, food grain to be released. Again, more funds transferred to state to supplement their efforts to cater to the immediate needs of the poor. and need to accelerate infrastructure spend of 1.7 lakh crores. It's very interesting. There was a story from Telangana that they're focused on completing the flyovers because there's no traffic on the road. So there is a flip side to this also. And then for ensuring food security in the future, look at agriculture warehousing and cold storages. There are other sets of recommendations from FICCI about interest-free collaterals for MSME companies for a period of 12 months. I think the loan which has been announced, waiver which has been announced by RBI should be made a directive. We need to change the NPA definition and the payment of statutory dues deferred by 6 months. Non-encashing of bank guarantees and corporate guarantees, etc., should be there. The government owes industry a lot of money, so that should be cleared there. And of course, a special liquidity line to NBFCs from banks, because the NBFCs are real backbone of the Indian economy. And then balance cost of banks refinancing, help manage cost of the other activities that the banks do. So the banks will have to be the center of this, but the banks cannot be allowed. Banks also need to be supported going forward. So what we are doing with members, and this is my last slide, we're working members with the healthcare industry to ramp up availability of beds, protective equipment, ramp out production of masks, sanitizers, personal protective equipment, overalls, etc. And then help new members from the auto sector and other sectors, defense sectors, to produce ventilators. We are also doing a lot of work under socioeconomic development by survival kits, provision of cooked meals, working with medical equipment donation, working with vulnerable households via direct transfer kitchens, setting up transfers, setting up community kitchens, and FICCI has also contributed 1 day salary to the fund. But what was very interesting, we appointed FICCI nodal officers in each state for facilitating the movement of essential commodities, to ensure that inter-district movement happens. And we really worked between, acted as a link between suppliers and buyers on essential commodities, including medical equipment. We also did a continuum of goods and services under essential categories and shared it and worked with it. And of course, we created a link with the state government nodal officers, and all the recommendations that we just shared with you, we flagged those and shared this with government to enable the constant dialogue to happen. Interestingly, one of the most well-received things was, in the initial stage of lockdown, no newspapers were going. So we sent a lot of members an e-paper tying up with one of the newspapers. And actually, that's what got us a lot of things, because people were not getting authentic news. So I thought I'll stop here, and this is the end of my presentation. Thank you very much for listening to me, and we'll take questions whenever they are scheduled. So thank you.
Dilip, thank you very much for that. I think that was a very insightful introduction to that. I think it was quite interesting to hear about those areas where the acceleration of obviously infrastructure development, particularly in terms of the cold storage, which I know is something that India has been trying to look at for a long time. So some green shoots coming out from that. I think it was also interesting to see your presentation on the 2% growth that is forecast. I was on a presentation a couple of days ago. Other economists are talking about 0% to 2%. So I'm looking forward to our conversation later on to look at that. Just as a reminder to everybody, you are able to ask any questions during the presentations. If you tap into your question panel on the right, and what we'll do is we'll save all those questions and we'll build all those up for the end Q&A session. Next, we're going to start to look at some of those government initiatives that are being put out in a little bit more detail, and look at some of those practical examples of what's happening to businesses. So it's been my great pleasure to introduce Jidesh Kumar, who is the managing partner of one of the UK IBC members at King Stubbe & Kaseva. They are advocates and attorneys in India. They have a full service legal practice with 6 offices in India, including cities like New Delhi, Bangalore, Mumbai, Chennai, Hyderabad and Kochi. and also an international office that's based in Milan, Italy. So no doubt they all have had some direct experience of some of the challenges from that office. Jinesh is working directly with a number of businesses in India during this crisis, and we're delighted that he's agreed to share his thoughts and knowledge on the issue. So Jinesh, over to you. Thank you.
Thank you, Chris, and thank you to all the participants for being able to join this COVID presentation. I hope all of you are safe and healthy, and as the government has recommended, and as recommended earlier by the presenters, please stay at home. And I think that's very important to ensure that the government controls this in a better fashion. Yes. COVID-19 or coronavirus has brought forth with it a lot of challenges, especially to the government of India, as well as to the citizens. And one of the primary challenges for the government is firstly to ensure that people stay at home. And now when people stay at home, it's also important for the government to ensure that there is no shortage of essential goods and services. And when there is a requirement for essential goods and services, there's also a requirement to ensure that there are enough incentives as well as enough space available for manufacturing and services company who provide essential goods and services, as well as supply chain companies in this space. So my presentation would encounter three different aspects. The first would be the response to the COVID virus by the government. The second would talk about response by the various courts and tribunals in India. And the third would probably be those unanswered issues to the companies and manufacturing and services businesses across India and the world. So I'd move to the steps taken by the government. Different departments, different ministries of the government have come together and have laid down different regulations and issued different orders for the benefit of companies during this time. I think one of the leaders when it comes to issuing relaxations was the Ministry of Corporate Affairs. Ministry of Corporate Affairs has extended the dates for filing of annual company returns and other statements and returns to September 2020, as against the original date of 31st of March 2020. Also extending, also in order to support new companies, there is a mandatory declaration of commencement of business that needs to be filed within a certain period of time, and this is now extended to 12 months from the date of incorporation. So newer companies get that much extra time in order to file such declarations. A very interesting regulation that came about was relaxing the rules on video conferencing. So the board meetings can now be held via video conferencing. The government also has come out with an interesting scheme called the Companies Fresh Start Scheme 2020, along with another scheme called the Limited Liability Partnership Settlement Scheme. So these schemes provide opportunities for new companies, for existing companies and LLPs to take advantage of the scheme. The government regulations, the MCA relaxations also extend to also providing for extension of time for board meetings. So what used to be a mandatory requirement of holding board meetings within a prescribed interval, this has now been extended to an additional 60-day period for the next 2 quarters. Also, independent directors of the companies are now not mandated to hold the meeting of independent directors for the financial year 2019-20. So what it means is that independent directors were supposed to hold meetings without the executive directors, and now during this period they can hold these meetings along with the executive directors. So that technically means that this particular provision stays annulled for this year. Also, one more relaxation which the Ministry of Company Affairs has come about is the requirement of a mandatory Indian resident director. So this has now been exempted for the current year 2019-20. The second step taken by the government was done by the Insolvency Board of India, and this has extended the threshold of default under the Insolvency and Bankruptcy Code from Indian rupees 1 lakh to Indian rupees 1 crore. So this is to ensure micro, small and medium enterprises do not become insolvent and their vendors or their financial creditors or their operational creditors do not approach the NCLT for claims against them till such time the government comes with a notification either reducing this amount of rupees 1 crore or till such time the government comes with any other additional notification either reducing or increasing this sum. The third interesting step taken by the government is vis-a-vis the banking and finance on the banking and finance front. So Reserve Bank of India has been in the forefront of these things along with the Ministry of Finance. The first major thing is the Reserve Bank of India and the Ministry of Finance has reduced the bank charges for digital trade transactions for trade finance consumers. The second one is to bring about a repayment moratorium for 3 months on all term loans. It also has extended the date of collection of stamp duty through the Stock Exchanges and Clearing Corporation of India till July 1st, 2020. And as the earlier presenter said, the interest on working capital has also been deferred to 3 months. The government also has taken steps with respect to direct and indirect taxes, where government has extended the due dates of filing of GST forms, e-way bills, and Sabka Vishwas scheme. And these are extended to June and July 2020 on the basis of the taxpayers' aggregate turnover. So for companies having turnover of more than 5 crores, the due dates of filing is 24 June, so they are probably the earliest. And for companies beyond having turnovers of less than 5 crores, the dates get extended to 30th and 6th, 3rd and 30th of July on the basis of their aggregate turnover. The direct tax, the dates for filing of income tax returns and linking of Aadhaar numbers has also been extended, and in all cases it has been extended to June 30th, 2020. One important step which the government has taken is in extending the deadline for realization and repatriation period of export proceeds. So this technically makes all foreign payments to be extended from 9 months to 15 months. So this also helps the customers in foreign countries, and also helps Indian software companies as well as manufacturing companies and other exporters to renegotiate their contracts and extend the contracts with their customers. SEBI has also been in the forefront during the coronavirus times, and has extended the dates of filing of forms for listed companies, mutual funds, real estate and infrastructure investment trusts, alternative investment funds, venture capital funds, etc. And these have been extended to May, June, and September, depending on the kind of company that you are. The government has also been forefront when it comes to employee benefits. The government has taken the initiative to contribute the entire 24% to the Employment Provident Fund for the next 3 months. Also, the date of receipt of employment state insurance has been extended to 30 days. And the government has also issued advisory to employers to not terminate workers. There has also been advisory to landlords to not terminate housing tenancy due to inability to pay. This has also been reiterated by the ministers, the chief ministers of various states on television almost on a daily basis. And there is also an advisory to disperse wages on time. The Disaster Management Department, the Ministry of Home Affairs, has been regularly issuing notifications, clarifications, press notes in order to ensure that there is no roadblock to essential goods and service providers. So there has been multiple times the Ministry of Home Affairs have tried to define what's an essential goods, and have also issued clarification on what forms the supply chain of producers of essential goods and services. There are also states which come out with their own amendments to these. The state government also has of various states in India have also laid down procedures for issuance of passes and permits to operate, also passes for labor, and also passes for transportation. While in some states there are online forms available, online passes available. In other states you have to do it offline, but there is a definite momentum towards online passes. I think that's a positive step for business. Next, I move to the steps taken by courts and tribunals. I think the biggest step that was taken was by the Supreme Court of India, where it used the powers provided to it under Article 142 of the Constitution, and has extended limitation periods of all appeals to the Supreme Court from high courts or tribunals till further orders to be passed by the Supreme Court. And the good part about this order is that it does not mention a last date, so which keeps it open-ended, and the Supreme Court will review the situation on a regular basis and will pass a relevant order as and when it deems fit, after consultation with the executive. With respect to urgent matters, there are matters of liberty, there are matters of urgency, which requires urgent attention, and the high courts and Supreme Courts are capable and are empowered and are also currently taking up matters through video hearings. In fact, I just finished a video hearing just before attending this conference call. On the insolvency and company matters, the National Company Law Appellate Tribunal as well as the National Company Law Tribunal have both allowed exclusion of the period of lockdown to calculate the period of resolution process. So there is some kind of a moratorium on that. And it also stays all the orders passed by the tribunals till the next date of hearing. Having said this, The NCLT has also been a little more flexible and has said that if there are any orders or interim stays which really affects the business operations of the company, then it is open to hear such matters. Now I move to the last part of my presentation, which is the open issues for companies. So as a law firm partner and as a lawyer, I see that these are some of the issues which are really keeping us busy, which technically also means that these are the major issues which are confronting companies at this point of time. I think the first and foremost one is interpretation of force majeure and frustration of contract clauses for business, vendors, and lease agreements. We've seen that in most of the agreements, either force majeure or frustration of contract does not contemplate such kind of a pandemic or epidemic or even a disaster. And even if they are considered, they're only from the perspective of termination of a contract. Now, in this situation where nobody intends to terminate the contract, the law also provides for certain doctrines. The doctrine of suspension, the doctrine of temporary frustration, the doctrine of improbability, and also the doctrine of peaceful possession. So these are all doctrines that needs to be read along with the situation provided for in the agreement before companies take decisions to either ask for a waiver or ask for deferment or ask for extension or any other mixed strategies that could be thought of. The government, while having issued certain notifications and advisories, has not defined what is a worker. It does not define what is a migrant worker, and it does not define what is an employee. The reason is that some of the notifications uses the term migrants or workers, so it doesn't use the word migrant workers. So there's a lot of confusion there, and the term workers is not defined in some primary legislations. Rather, the terms used is workmen. So there is a confusion when the word workers comes in guidelines. Another issue which companies would probably be facing is the effect of imposition of advisories on companies, especially companies that are not or businesses that are not financially sound. Considering that this is an advisory, and also considering the fact that this is an advisory which is passed under the Disaster Management Act, there are various schools of thought. One school of thought is that since this is only an advisory, it should not be deemed as a legal position, and hence there is no obligation on the companies. There is also the other school of thought which says that since this is passed under the Disaster Management Act, there is a mandatory requirement for companies to follow this. Well, we are also recommending companies to jointly file a writ before their courts, before the high courts or the Supreme Court, to seek clarity, because without clarity, many companies which are not financially sound and do not have fundraising strategies would either become defunct or will have to close down and will impose onerous liability on the promoters and directors and shareholders of the company. The other issue that we are facing currently, or the companies that are facing currently, is data privacy and cybersecurity risk during work from home. The Department of Telecommunication has come out with notifications stating that all companies can now use technologies to work from home. However, when it comes to data privacy and cybersecurity, there are no regulations which govern. So companies will have to put down strict data privacy laws and cybersecurity policies in order to ensure that the COVID-19 virus time or the coronavirus time does not lead to litigations for them after the end of this catastrophe. We've also seen that when it comes to mergers and acquisition and investment transactions, there are companies who are looking at either invoking the material adverse change or have already invoked material adverse effect clauses and are rethinking valuations. So these are also issues that companies might be facing. One of the important things that companies should probably be looking at right now is reworking on employment agreements, especially policies and processes to include supervision and managerial responsibilities to avoid labor loss. We've seen that there are some employment positions where there are supervision and managerial roles to a clerical job. So those were not included, and hence they are now required to comply with labor laws. So I'm also seeing a lot of inquiries on companies wanting to rework the employment agreements. Fortunately, the government is looking at providing economic incentives to the government. However, it is still in the government's boundary at this point of time. The other issue which I think companies could probably be facing is emergency fundraise. So it's important for companies to also ensure that they do not fall into deep traps and provide take loans on at high interest rates. So I think all of these needs to be considered by companies. Yeah. So these are the points that I had to cover, and I now and this is probably the last slide of my presentation, and I now give it to Chris to take it up further from there.
Thank you so much, Dinesh. I think that was an extremely interesting overview of those initiatives that the Indian government has come, and it does pose a number of questions that I've got, which I'll put towards the end. And then finally, we've got our third panelist, and I'm delighted. Hello, sorry. Hi, Ajit. Yes, I'm delighted to introduce Ajit Randan, the chairman of FICCI Economist. He's the chairman of the FICCI Economist Forum, and he's the president and chief economist of Aditya Birla Group, the Indian multinational conglomerate. His professional career has spanned academic and corporate assignments, including teaching in universities in India and the US, as well as serving on various committees of the Reserve Bank of India. And he's also a member of the National Executive Committee on FICCI. Very much looking forward to hearing your commentary, Ajit, on the sort of Indian economy and your thoughts. So over to you.
Thank you, Chris. Can you hear me?
Yes, hear you perfectly.
Great. So good afternoon, everybody. And I'm just going to take a few minutes to talk about the effect of the COVID pandemic on India. And currently, we are in the middle of a 21-day national lockdown. So the immediate effect of the lockdown is almost 3/4 of the economy is practically shut. Companies are shut, businesses are shut, factories are shut down, services, restaurants, everything. Just a few highlights for your consideration as what's happening in the current situation. 87% of the rural workforce and 53% of the urban workers are self-employed or what is called unorganized sector. So these are people who typically are depend on daily wages or livelihoods which are very precarious. Many Indian cities have 40 to 60% of migrant populations. So because of the lockdown, they have been caught with great stress on their livelihoods or their incomes. So many migrants have chosen to, in fact, go back or like a reverse migration to their villages, and that's been a bit of a disruption. Although that was the initial case, but now I think it's stabilized. Essential goods and services are permitted, and progressively the government has been very responsive in relaxing restraints on movement of trucks and transport, especially to transport goods and services, essentially including food. But we may be having to brace ourselves for a bit of an inflationary situation as far as food inflation is concerned, or raw material shortages. 53% of Indian businesses have indicated that there's going to be a big impact of COVID-19 on business operations. In fact, there was a FICCI survey, and 42% of the people said it will take up to 3 months for any normalcy to return. Energy consumption has declined by around 22% since the second week of March. 8 states of most of the COVID cases are not distributed uniformly across India. So 8 of the states which are worst affected account for 55% of India's GDP. Let's go to the next slide. So what have the Indian policymakers done so far? We've had 1.7 trillion rupees of worth of a fiscal package, which is basically direct income transfer, food entitlement, food grain entitlement, wage increases in the rural employment guarantee scheme, which is also like a proxy unemployment insurance, advances or money transfer to farmers, and some contribution to the retirement accounts of workers, low income category. But even then, this fiscal stimulus is much smaller than not just India's needs, but in comparison to other G20 countries. It amounts to 0.8% of GDP, whereas typically larger economies have done 8 to 10% of GDP. So I think much more is likely to come in the coming days. On the other hand, the monetary authorities, the monetary stimulus has been quite significant. There's been a drastic reduction in interest rates, and there's been a huge injection of liquidity into the banking system, almost to the tune of 4 trillion rupees. And there's been a moratorium on loan servicing. That is, no interest payments are due for next 3 months. What is the impact of all this? Of course, the fiscal deficit is going to be stretched. It was already 4.5% of GDP before COVID, and we expect, of course, tax revenues to also fall. However, there's a silver lining that because of fall in crude oil prices, the petrol and diesel prices in India have not fallen as much, and the gain has gone to the government in terms of higher sales tax, excise duties. So that will help to at least meet some of the new fiscal commitments. And of course, just like the central government, the state governments, state finances will also be under strain. And all of these, the center and states, will have to find ways to stretch the fiscal deficit. I mean, there's a law which puts a cap of 3%. But in these times, perhaps there will be an amendment. The last point is that the Reserve Bank of India has now started injecting liquidity in a somewhat unconventional way. They call it the TLTRO, Targeted Long-Term Repo Operations, which are actually intended to help specific borrowers like non-bank finance companies and housing finance companies who found it difficult because of a credit freeze. Some of the longer term effects of this is that, of course, we might see diversification of value chains, people taking a view about moving some of the production bases out of China or into countries like India and Vietnam. We'll also see a lot of unconventional fiscal and monetary policies, such as the central banks directly providing credit to the private sector. We could also see, slow revival of consumer and business confidence, a huge increase in the healthcare spending across many economies, including India. And we also have to worry about risk aversion affecting emerging market currencies and commodities such as India's. So as we stand today, the Indian GDP growth rate for this year is still expected to be positive, perhaps 2%, plus 2%, when in fact most of the world except China is going to see GDP contraction, especially in this quarter, April to June. I believe that large economies will see a contraction of 15 to 20%. India's GDP during this quarter also may see some shrinkage, but overall it will remain positive for this year. And as far as what is the estimate of how long it will take to come back to a normal situation, it's difficult to say. At least 2 or 3 months to, in fact, limp back to out of the lockdown. And the sectors which have been badly affected, of course, are travel, tourism, hotels, restaurants, hospitality. But the other sectors like pharma, healthcare, and consumer products, essential goods and services, they will return quickly. I believe automobile also should see some revival. Banking, because 75% is owned by the government and is in the public sector, that also will see some support. Airlines, of course, will take some time. I just heard that the Singapore airport has decided. Singapore has decided that Terminal 2 will remain closed for the next 18 months, and that's a pretty strong view to take on revival. So I would say to come back to about 6-7% GDP growth rate, it's going to take at least 6 to 9 months. So we'll see. I think I'll stop there and maybe we can take some questions.
Yeah, thank you, Ajit. I think that's a very interesting overview that you had there. In terms of sort of the questions, I guess the first one from me really, in terms of Ajit, what's your sort of anticipation? Yeah, sort of I've heard varying numbers from 0 to 2%. And what's your thoughts on any possible extensions to the current lockdown?
I'll take the second part first. The lockdown is currently nationwide, but as I said, it looks like out of the 600 odd districts in India, 650 districts, it looks like 60 to 70 districts, that is 10% of the districts, are much more vulnerable or what are called hotspots. So it is possible that the lockdown will be extended in those 60-70 districts, which includes essentially big cities like Mumbai and Delhi. But for the rest of the country, there will be a progressive relaxation. That's my expectation, so that at least many sectors can resume operations, production, such as chemical factories, textile, coal mining, and of course restoration of the logistics networks in terms of road and railways. At least in other parts of the country. Not all sectors will come on stream immediately, but certainly the essential goods and services on all their required supply chains and the input materials, that industry will start. Labor-intensive industries like textiles probably will get priority, and progressively, that's what I anticipate. As far as the GDP growth estimates are concerned, it's difficult to say because we can only build a scenario of whether it will be a V-shaped recovery or a U-shaped recovery. But my feeling is that given the sort of large component of consumers in the economy, and also the relatively large portion of government-supported relief, including in infrastructure and so on, I still think that it's possible that India will have maybe a 2 to 3% GDP growth rate this year.
Thanks very much for that. I think that's really interesting. Obviously, as you say, there's so many different factors that need to be built in, so it is almost impossible at the moment to sort of try to forecast on that. Jidesh, if I just come over to you, you mentioned in your presentation some of the relaxation of some of the bureaucracy, with obviously the ability to be able to do webinars for board meetings, and very much the push towards online forms. Do you think that will continue post COVID-19? Because our ease of doing business survey shows that bureaucracy and legislation is still the biggest challenge in India, and obviously this is hopefully something positive that could come out of this crisis.
Yes, thank you, Chris. Sure, I think this is going to remain. In fact, the Chief Justice of India yesterday made a statement that all technologies are going to stay. I think this is also going to be the same with the executive, which controls the Ministry of Company Affairs, which is the regulator for companies. And I am hopeful that it will continue, and I think this would also mean change in the way things are done in India.
Perfect, thanks for that. We've got a question here coming from Sterling Smith. I think the UK government has obviously announced significant package of stimulus. You know, they've almost nationalised the workforce, and the fact that anybody who isn't working, the companies are able to apply for 80% of the salaries to be paid. But our understanding is that isn't in place in India at the moment. But maybe it's a question to Dilip. Dilip, what are you guys pushing for in terms of what you would like the Indian government to bring out, and how quickly do you think that will come into play?
Missed the first part of what you actually asked for. Can you just repeat the first part of the question?
Yeah. So we were talking about the UK government has obviously put a huge stimulus package in place with the 80% payment of those workers who have been what the terminology is furloughed, so essentially can't work. So interesting to see from FICCI's point of view, what are you pushing for in terms of the stimulus package for your members, and so what is the time frame that you think that there will be additional measures in place?
So again, like Ajit took the second part first. I'll also take the second part first. I believe that maybe in the next 2 or 3 days, maybe tomorrow or maybe day after, you would see some kind of a package being announced in India. Currently, the package that has been announced in terms of payment support for workers is limited to companies having up to 100 employees, with 90% of them actually having less than 15,000 rupees. And if they are paying their provident fund dues, then the government meets the 24% of their provident fund, right? So that is the only kind of support other than the waiver of deferment of repayment of loans, etc., that has been talked about. So we expect, industry has been saying that if you want us to continue paying people in a period of lockdown, much more is required. In fact, depending on the medium and small industries and the size they are talking about 2 to 3 months of wages being given to them, and the requests vary from a grant to a soft loan payable over 2 to 3 years, right? So that is what the people are looking at in terms of government support to workers. But the bigger issue with workers, and the slide with which Ajit actually showed among the migration pattern, is that a lot of migrant workers have actually gone back to their homes. So, the moment the lockdown kind of lifted, how do you get, do you have to run special trains or special transportation, buses, whatever it is, to get the migrant workers back to where they are, to be able to, kickstart and start industries. So that is the second type of thing with regard to workers that they're looking for. And I think today everybody believes, all the sectors believe that hopefully, the lockdown may be lifted partially in some areas by 15th this month. And for the areas that are open, then maybe there will be one type of support required, and the areas that are closed, I think the support required will be much more. So, everything is all the kind of packages and all are premised on the fact that we might get back to normal by 30th of June. But at this point of time, 100% of the economy getting back by 30th of June looks very, very unlikely. And each of the different segments that are impacted differently would expect a different kind of a relief package from government for workers. I mean, if you're going to close the hotels and restaurants for beyond 2 months, then they would require much more support, for example. So I think as time goes by, and depending on which sectors are hurting more, the request from government is going to change. So it's not a static request at this point of time.
Yeah, no, thanks very much for that. I think that links into quite a lot of questions that we've actually had about the labour workforce obviously returning back to their native places, and obviously how that's going to kickstart once the lockdown has been sort of uplifted. One question we've got in here from Isaiah is asking about the medical exports and whether you feel as if there's going to be a relaxation on that. Obviously the opportunity to export raw materials such as fabric is obviously a challenge, and obviously that's needed vastly at the moment in sort of masks and gowns. So I don't know, Ajit, do you have any thoughts on whether there'll be any relaxation on the exports?
Well, we just had the news item yesterday, right, where there was a discussion about the export of hydrochloroquine, which seems to be working in the treatment of COVID patients. So India just relaxed, I think, its export restrictions on this drug, this medicine, to many countries, including the US. It's a bit tricky because on one hand, as I said, the numbers in India are low right now. The total number of infected patients is 5,000, and the number of people in ICUs or hospitalization is even smaller. So it's not clear how many people are going to require. It's very difficult to predict, but the country has to keep ready stocks because at short notice it's difficult to import. On the other hand, India has been known as a strong player in pharmaceutical exports and pharma supplies, medical supplies. So in times like these, if the exporters do not service their clients' requirements, in times of need, they may lose the relationship or the trust. So that's why it's a little tricky. The government had first put a lot of restrictions, but it looks like the government is taking a pragmatic way of selective relaxation on export controls.
Okay, thank you very much for that. We've got another question in here from David Landsman. India already has an important position in the global pharma sector and some pioneering medical services, both physical and digital. Are you likely to see opportunities for India in these areas after the crisis? So perhaps I can put that to you, Dilip.
Yeah, so I think already this medical tourism was a big segment in India. It kind of took a backseat because now all the medical facilities are being used to address the domestic situation. The other aspect is that if we, to the previous point that, we already are the largest producer of HCQ in the world, right? And that is being exported. But there's only a restricted ban in HCQ, so government-to-government deals are being done, but other deals are not being done. We look at one of the things that I made, and even Ajit talked about in this presentation, was realigning of the supply chains. So I think in the pharma sector and in some critical medical equipment sector, and the government and many state governments have also announced packages in the middle of all of this to attract medical equipment and the pharma API production. So we expect that India would be a significant player going forward in this in these segments.
Thanks very much for that. Just a couple more questions. Hope everybody doesn't mind us slightly overrunning, but obviously this is such an interesting topic for everybody. One question that's come in from Dipankar and sort of links in nicely to a blog that I recently wrote on the business process outsourcing sector in India and what the impact would be on that. Jidesh, if I could come to you, please. I think you mentioned there, cybersecurity being a huge challenge at the moment. Obviously, lots of people are very important workers working for the telecommunication companies, and of course working also for the banks, providing that vital infrastructure services for all the online support that we all take for granted now. So Jidesh, what do you think is going to be the sort of the impact on the BPO sector, and how do you think the businesses are going to be able to look at that sort of cybersecurity issue?
Chris, I'd like to come in after Jidesh. So, after he answers, I'd like to come in on this.
Perfect. Yes, thanks, Philip. Jidesh?
Sure. The BPO sector in India can be put into 2 or 3 different slots. I think the first one is BPO, which is providing services to essential commodity and goods companies in India, as well as those from outside the country. And second are those BPOs which are not providing services to non-essential services and commodities businesses in India, and also international companies which are operational in India. With respect to companies which are providing essential services in India, we see that a lot of companies have been permitted to operate from their offices. However, when it comes to work from home, the companies were not prepared. So I'd certainly state that it's important for the companies to have such kind of policies in place. They had work from home policies, but it did not. It was not prepared for an exercise of this magnitude. So I'd say that it's important for the companies to really be ready and also make it contractually more stricter, because India's data privacy laws are in the offing, should probably be coming out in a month's time. And I think once that comes into play, a lot more things will come into place. But till such point in time, I'd still say that it's important to have very strong contractual restrictions.
Yeah, Chris, can I come in?
Yes, please. Yes, if you can comment on that, Dilip.
Yeah, I think, what neither of us we missed out covering was that when this crisis hit, the first thing that the Ministry of Telecom and the government did was actually modify the order on other business services and allow them the facility to work from home without, extensive permission. Second, NASSCOM actually came out with extensive protocols on how to ensure security and how to actually ensure that there's continuous, there is no breakdown in any service provided to any client anywhere in the world, whether in India or anywhere in the world. And the third is that, the government and the state governments are actually working to make that happen. So, in some cases, people need laptops replaced and all. In Maharashtra, NASSCOM actually tied up with the Home Guards to deliver laptops and other aspects. And the one message that, India is sending out is, in this whole thing of IT and ITS services, we are all actually working together across governments, across industry, to ensure that there's no failure of delivering service to any client, whether in India or anywhere in the world.
Fantastic. Thanks very much for that. I think, unfortunately, we're going to have to ask our last question now. And this has come from Sham, who heads up the West Midlands India Partnership. And he's asking about the manufacturing sector. And sort of as we come out of COVID-19, do you see an opportunity for India in terms of the Making India brand to sort of push? I think that globally there perhaps has been a realization that many supply chains are over-reliant on China. And obviously there needs to be a rebalancing. Obviously there's a double-edged sword for that, and the over-reliance on India in terms of business process outsourcing. But I wonder, from your point, Ajis, whether you think there's an opportunity for India post-COVID-19, and what sort of policies do you think India has to be putting in place now to sort of benefit from that?
Oh, most certainly, Chris. Actually, even before the COVID pandemic, because as a consequence of the US and China trade dispute, I think there were already a lot of companies thinking about some kind of a diversification of their production bases outside China. and there were many inquiries with India, and some of them had progressed. So this was happening in any case. The second factor which was helping this along was that China itself, as a conscious industrial strategy, is vacating the space of low-cost manufacturing. That is low-cost meaning labor-intensive, low-cost manufacturing. So that's part of a national rebalancing strategy, which has consequences of movement out of China. And thirdly, because of COVID now, many people are going to have a fresh, different perspective. So because of all these three reasons, I think anyway, there's going to be a migration away. And when it comes to labor-intensive sectors like textiles, leather, footwear, agro-processing, and also I would say tourism, which is not a manufacturing sector, it's a services sector, but it's a labor-intensive sector. These are very high potential sectors in India. And a fourth factor, I would say, is India's own conscious moving away from the way Indian policymakers have thought about global value chains and about movement of the supply chain from countries which are part of free trade agreement. India has a free trade agreement with the ASEAN 10 countries, with China, with Japan, South Korea, Singapore. What used to happen is that the earlier thinking was that if a commodity has to move across state borders, country borders, it has to have significant value addition, rules of origin, requirements. But now I think there's an understanding that even if there are value additions of 4 or 5%, so long as it's generating employment, it's very important to be part of regional and global value chains. So the happy news, for example, is that just a few months ago, India reported an export of some 100 or 200 million mobile phones, which has happened after quite some time. Those are, of course, there's an assembly operation, and perhaps the electronics comes from Taiwan or Malaysia. So if this is the trend, I think there is a tremendous scope for relocation of manufacturing base into India.
Thank you very much for that. Unfortunately, we don't have any time for any more questions, so apologies to anybody who put a question forward and we weren't able to get to that. Just a reminder that this session has been recorded and will be emailed out to everybody. We'll also put a notification and a short blog up about some of the areas that we covered. Our next webinar is on the 16th of April, and as I mentioned, that's looking at university social responsibility, and so those details will come up back. I think finally, just for me to thank Ajit, Dilip and Jidesh for your time. I think it's been greatly appreciated, and it was very much shown in terms of the high volume of people that we've had on this call, was how relevant and how important the topic is. We'll continue to do webinars in conjunction with FICCI, and obviously in conjunction with our members as well. So if there are any thoughts or any comments about topics that you would like us to cover, please feel free to send us those via our Twitter handle at UKIBC, via LinkedIn, via our group, or my email is chris.hayes, that's HEYES, at ukibc.com. Thank you everybody for your time, and I wish you a safe and onward day. And of course, our thoughts are with everybody at this moment to please all stay safe. Thank you.
Thank you, Chris.
Thank you, Chris. Thank you so much.
Whoa.